pull up a chair, pop a bottle of champagne, because we are looking ahead to the new year and what's in store for real estate in 2023.
I keep it real, I keep it real, I keep it real, just keep it real.
Hey guys, I'm Sam Hartman, keeping it real estate here in Fort Wayne, Indiana. Thank you for joining me for another deep dive where our goal is to help inform and educate consumers on what's happening currently in our real estate market. Today we've got a great one for you. We're talking about projections and what's ahead for the 2023 real estate market. And we're going to start with a quote from someone pretty important in the real estate world right now, and that's Jerome Powell. He's the Fed chair. This is the guy that is pulling the strings on America's economic policy right now, and he's who we have to thank for the whirlwind of what's happened with interest rates over the last year. So Jerome says, I'd say if you're a home buyer looking to buy a home, you need a bit of a reset. We need to get back to a place where supply and demand are back together, and where inflation is down low again, and mortgage rates are low again. So since this is a man that is so keen on the economic levers and the economic policy of the United States, I want to spend some time looking at this quote and looking at the three key things he points out. He points out 1, supply and demand, 2, inflation, and 3, interest rates. So he basically outlines exactly what the government is trying to do with their economic policy. They're trying to balance supply and demand. They're trying to curb the effects of inflation, and ultimately they want to see interest rates come back down. So that last one with interest rates, I think, is extremely important for home buyers and home sellers, because he's basically telling us, hey, we don't love interest rates going high either. We want to see them come back down. So that's hopefully some positive insight that that's what we're to expect in the next 12 to 18 months is a reduction in the interest rate pressures that we've been seeing over the last year. Another thing I want to point to in this quote is his comment about supply and demand. Supply and demand has been one of the biggest indicators and the biggest reasons our real estate market has been as competitive as it has been over the last several years. They call a balanced real estate market to be somewhere between 6 and 7 month supply of homes for sale. Basically what that means, if not a single home hits the real estate market, it would take 6 to 7 months to sell all the inventory of homes currently on the market. Well, I tell you what, here in Fort Wayne, over the last several years, we've been operating at under 1 month supply of homes. And although we've seen inventory rise a little bit through the year of 2022, it's still under 2 months supply. It is still far, far off from what we consider a balanced real estate market. And so we still have a long way to go there. But I think there's an even bigger reason to the true dynamic between this offset between the supply and demand. And I think it's stemming from the mortgage crisis of 2008. When this time hit the real estate world, it hit the US, not only did foreclosures increase, but a lot of builders went out of business. And a lot of other builders that were able to keep their lights on severely reduced the number of homes they were building because the demand was not there. So it has actually been a 15-year window where in the United States, we have been underbuilding our national average, what is typical per year of new construction starts and construction builds. We have been underbuilding for 15 years. And so that's 15 years worth of supply that never truly hit the market. And when you think the average homeowner moves every 7 to 10 years, those homes would be primed to hit the resale market and be available for this large swath of demographic buyers in the millennial generation, in the downsizing baby boomer generation. but they're not hitting the market because they were never built. So regardless of what happens with inflation, with interest rate, I think this supply-demand discrepancy is still going to remain a really major factor in our real estate market for years to come, because the millennial generation is one of the largest home buying generations we've ever seen, and they're now in the real estate market as buyers. And so I don't see demand lessening in the future, and I don't see builders being able to build homes quick enough or affordably enough to really meet that demand. So I think supply and demand is going to continue to play a major role in how our real estate market moves forward. Let's project into 2023, and let's start with mortgage rates. But before we look where we're going, let's look where we've been. And this is a chart that shows the path of interest rates over the last year, all of 2022. And so you can see the roller coaster ride that we've been on, up, 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 up. And it's been a super unique year because never in the history of tracking this data have interest rates more than doubled within a 12-month span. So this has clearly put a unique pressure and strain on the real estate market. It put a big pause to buyers and buyer demand. But I want to encourage buyers that I think there's great opportunity, even though interest rates have risen. If you can afford the house, if it fits your budget, I think there's great opportunity to buy in today's market and not have the bidding wars of the past, not have to pay over asking price, to be able to maybe even get some seller's concessions that can make that home more affordable to you. I think there's more negotiating power right now for buyers because so much of that buyer demand has been put on hold, put on the sidelines because people are just so uncertain about what's happening with those interest rates. But let's try to inject a little bit more certainty and a little bit more optimism about the market. And let's look at what's projected for interest rates going forward into 2023. And so you saw on the previous graph where interest rates at last reading are kind of currently holding at about 6.3, 6.4%. And so if we look at these four projections from Freddie Mac, Fannie Mae, MBA, and NAR, all of their projections through the 4 quarters of this coming year are really feeling similar, kind of in that same vein. So we do think that the major effects of the government's economic policy has really already taken its hold. There's been some positive indicators as far as inflation slowing down goes. And so that's a positive sign that maybe we're not looking at major increases starting 2023 to the interest rate. You can see the highest projection there from Fannie Mae is 7%. And so we averaged all 4 of those projections out. And so for the first quarter, it's looking like they'll be under 6.6%, 6.35% for quarter 2, 6.2% for quarter 3, 6% for quarter 4. So that is really positive news. This kind of fits in line with everything that I've been researching and hearing as it pertains to projections for real estate interest rates, is that we expect them to kind of plateau here at the start of the year and kind of have a downward trajectory over the coming 12 to 18 months. So we do expect the tempering of those interest rates. Now, if you've bought a home at a high interest rate, or if you're scared to buy a home with current interest rates, if and when interest rates come down, you're gonna have that opportunity to refinance that mortgage and bring that interest payment down that's part of your mortgage. But guess what? If interest rates don't come down, don't you think you would be happy and excited to have bought a house at today's interest rate rather than waiting for them to go up and getting stuck with that when they go up? So that's just food for thought. It's something to consider for all the home buyers out there. And so Greg McBride from Bankrate, we'll read a quote from him. He says, mortgage rates could pull back meaningfully next year if inflation pressures ease. So this really is the true moneymaker here, is what happens with inflation in 2023. If we see that pressure ease, if the government policy has been working, then we really do truly expect those interest rates to pull back and to see some relief there. If something happens where those inflation rates are still high and the pressure is still pushing on inflation, we might see those interest rates kind of remain in that mid 6 or possibly even rise. So that will be a key indicator that we will be keeping an eye on as we go into the new year with 2023. Another projection we've been talking about is total home sales and what those might look like next year. And so we've got a graph here that's been tracking the total home sales across the US since 1999. And you can see there is a huge ramp up there to the mortgage crisis. And I want to point that out because the mortgage crisis what led to the mortgage crisis was basically really loose lending standards. People had availability of financing that probably shouldn't have ever had the right to buy a house in the first place. So money was basically cheap and easy to come by to buy a home. People were able to buy homes that maybe shouldn't have been buying a home. So there was this propped up demand, which led to some very high overall sales numbers leading up to the mortgage crisis of 2007, 2008. And so since then, you can see the upswing to more recent years has been much, much more gradual. And so that's as the economy recovered, as housing recovered, appreciation started happening again, the home sales kind of began to increase. And so this last year, 2021, we saw really great sales numbers, really great volume of homes being sold. And by the end of this year, 2022, we're going to be taking quite a bit of hit there. And 2022 has felt different because interest rates rose so quickly. So that affected the overall number of homes that were being sold. And the projection for 2023 is looking even lower. I want to say they were projecting just over 4.1 million homes sold. So that's another pretty decent reduction in the number of homes sold. Now, what does this mean for consumers in real estate, whether you're a buyer or whether you're a seller? I gotta be honest, this projection is not nearly as important to you as it is to those in real estate. A trend that you will begin to see over the next year is a lot of realtors will no longer be in the real estate business. And the true fact of that is just there's not going to be as many transactions to support the high number of realtors that got into the business in recent years. The true statistic is that 90% of realtors will be out of the real estate business within their first 5 years in real estate. So that's just something to consider as you search for the expert to advise you, whether it's in your home buying process or your home selling process, is you want someone that's going to be there for the long haul. You want someone that's seen some things, done a lot of transactions, and has been through some of the ebbs and flows of the real estate industry. So I'm happy to say I am now going on 10 years in real estate, and I plan to do it for 100 more if I'm allowed. So if you do ever have questions about these market insights, I hope you'll send me a message. I hope you will find my advice and expertise helpful because I really do truly feel like I'm trying to bring value to consumers out there, and I really do highly value my knowledge and expertise that I'm able to bring to the table for consumers. So I hope you'll reach out to me if that is ever something that you have further questions about. So here it is. Here's that projection now for 2023. 5.1 million home sales, Fannie Mae, Freddie Mac, MBA, NAR. We take the averages of those four projections, and they are averaging out to guesstimate at 5.1 million transactions all across the US. So again, that is a reduction. It'll be less transactions. It'll be less people listing their home for sale, because they don't necessarily want to go be a buyer at a higher interest rate if their home still currently meets their needs. Now, there will still be people moving. People will relocate. People will get jobs. People will grow their families. People will shrink their families. And those are all reasons that people will move in this real estate market. So is it a right time to buy a home? Is it a right time to sell a home? Honestly, that always depends on every individual's personal situation and needs. What needs do you have that need to be met from your home? And does the timing, does the market dynamics make sense for you to do a transaction in this market? Again, reach out to me if you have questions on it. It's one of my favorite things about my job is helping ask the right questions and helping lead you down the path to a great real estate decision for you and your family. All right, so we looked at what was happening with mortgage rates. Now, what are the price projections? I can't tell you how long I've heard from people, I just want to wait for the housing market to crash. That's when I'm going to buy a home. Well, I tell you what, the crash of 2008 was a very unique set of circumstances that led us there. And today's current market circumstances are very, very different. Lenders are lending to buyers that are much stronger buyers, much better income, much better credit scores. And although we're going to look at the projections for house prices here nationally, it is a far cry from what one would consider to be a crash. I also want to quantify, and I always ask this question when I hear someone bring up the C word, crash. What is a crash? What would a crash look like to you to then jump into the real estate market as a buyer and for you to feel like it's a good decision to buy a home? Well, most of the time people will tell me a number like 15%, 20% reduction in value. And so that's fair. That helps me quantify what they expect to be a crash. But let me tell you this, that the housing crash national average price reduction was 20% during the mortgage crisis of 2008. 20% over a 5-year period was the average reduction in values. Now, guess what Fort Wayne, Indiana price reduction was during the mortgage crisis? From 2007 to 2012, we had a 5% reduction in values. Now, that is one of the largest nationwide housing economic crisis we have ever seen, and our market reduced by 5%. To me, that's not worth waiting. That doesn't make sense to me to be sitting on the sidelines if buying a home for your family today makes sense. Keep this statement in mind. Time in the market will always beat timing the market. It is really, really tough to time whether it's the real estate market, whether it's the stock market. But if you commit to the time in the market, your real estate investment, your home, will appreciate substantially over the course of a 30-year mortgage period, and you will be wealthier because of it. So let's look at these home price forecasts for 2023. We've got a bunch of forecasters involved in here. Some from the optimistic side of appreciation over 5%, and some on the negative side with depreciation as low as 5%. So averaging all of these projections out, we see a very, very moderate price appreciation of 0.4%. Now, I think this is a big, big indicator of the pause to the demand. Because of interest rates rising, a lot of buyers have paused their search. And so if interest rates begin to temper towards the back half of the year and going into 2024, I would not be surprised to see that price appreciation begin to speed up again in the back half of the year. And I kind of expect 2024 to be a much better looking year in terms of price growth appreciation. But look at this graph. Does this mean because there's projections that there may be price depreciation this year, does this mean that it's a bad time to sell a house? Does this mean it's a bad time to buy a house? Again, it's individual on everybody's needs and timing. But if you're a homeowner, you have seen nothing but appreciation over the last 10 years. You have built an amazing amount of wealth in your asset. So a couple of months of depreciation, if the time is right for you to sell your home, I don't think is a big reason to say don't sell your home. We're going to jump into another quote from Mark Fleming, First America economist. The housing market, once adjusted to the new normal of higher mortgage rates, will benefit from continued strong demographic-driven demand relative to an overall long run of shortage of supply. So this is exactly what I've been saying. The demographic demand. The millennial generation is the largest generation that is now reaching their prime home buying stages. So higher interest rates have not gotten rid of that buyer demand, but it's put a lot of that buyer demand at bay. It's put a pause on it. So when people begin to adjust to the new normal market, they get their minds wrapped around new interest rates, new budgets. They realize interest rates aren't going back to 3%. They will begin to start entering the real estate market again. And when they enter the real estate market again, that new demand will again put pressure on the supply chain and the overall supply of homes that we have, and might even start to bring it back down as we've seen some gains in the last recent months. And another quote from Doug Duncan, Senior VP Chief Economist from Fannie Mae, kind of further drives home the point about these demographics. From our perspective, the good news is that demographics remain favorable for housing. So the sector appears well positioned to help lead the economy out of what we expect will be a very brief recession. So he says it again here. There is great demographic nature to the buyer pool that we expect will continue the positive trajectory of real estate in 2023 and forward. So although we are staring a potential recession down in the face, we expect it to be a pretty short recession, and we expect housing, which is one of the greatest economic drivers in our country. Every housing sale and housing purchase pumps a ton of money into the economy. So we expect housing, again, with these strong buyer demographics, to help lead the country out of a recession that might happen in 2023. Thanks for staying with me on this deep dive today, guys. I know it was a longer one, but as we're looking at all these market dynamics and projecting into the future, I felt like it needed a little bit more in-depth analysis and information to be covered along with it. But thank you for staying with me. If you know of anyone that could benefit from this information, make sure you share it. If you have comments or questions, send me a comment. Send me a like if you thought this information was helpful. But ultimately, let me know how I can help you in achieving your real estate goals, because every family is so unique in their timing and their needs. I just want to help you be the best consumer you can be in today's market and to make the best decisions that you can as a consumer in today's real estate world. Thanks again for staying with me, and remember, keep it real estate.
I keep it real, I keep it real, I keep it real, just keep it real.